We have officially entered a historic window for the global financial system. On this Monday, February 23rd, 2026, the silver market is flashing a signal that most institutional desks were not prepared to see. After months of technical compression, the price has surged past $80, and we are now staring at the next major wall between $85 and $86. This isn't just about a ticker moving higher, it is about a fundamental shift in how the world perceives value during a period of extreme currency volatility. For the new people joining us, you have to understand the gravity of this moment. We are watching a liquidity event unfold in real time. In a normal market, price moves are driven by supply and demand. In a liquidity event, the moves are driven by a desperate scramble for safety. Silver is currently whispering what the rest of the market will soon be screaming. The era of easy paper is ending. The gold to silver ratio is compressing at an aggressive pace. And when that ratio tightens during a period of global debt expansion, it signals that the smaller, more volatile metal is taking its place as the primary hedge against systematic failure. But here is the open loop that should keep every trader on high alert. While the Western markets are focused on the $85 level, something far more dangerous is happening behind the scenes at the COMEX. The registered inventory, the actual physical metal available for delivery, has been draining at a rate of millions of ounces per week. Why is the metal vanishing even as the price is suppressed? Is there a hidden buyer behind the curtain, or is the exchange itself approaching a mathematical zero? The answer lies in a massive resource divide between the East and the West, a divide that involves a $3 billion secret deal that has effectively placed a permanent floor under the silver price. The resource divide is no longer a theory. It is a documented reality. While Western traders are playing with paper leverage, the East is securing the physical atoms. China recently took a decisive step by imposing silver export controls, effective January 1st, 2026. Under announcement number 68, Beijing has implemented a strict state trading regime, granting licenses to only 44 state-certified companies. This policy is expected to cut global supply by as much as 70%. They aren't just hoarding silver, they are nationalizing it for their own strategic industrial and military expansion. But the real smoking gun is a $7 million prepay offtake agreement that signals a massive shift in corporate behavior. A major technology giant, Samsung C&T, has bypassed the COMEX entirely to fund the restart of the La Parrilla silver mine in Mexico. By paying upfront to lock in 100% of the mining of its production for the next 2 years, Samsung is proving that tech giants no longer trust the open market to deliver physical metal. When the world's biggest industrial consumers stop relying on centralized exchanges, the paper price becomes a sideshow. But here is the open loop that should keep you awake. While corporate giants are bypassing the vaults, a massive short position of approximately 450 tons is currently sitting exposed in the Shanghai markets. This massive imbalance echoes the historic nickel short squeeze of 2022, where a single miscalculation broke the exchange. If these shorts are forced to cover their positions during a period where China has already turned off the export tap, where will they find the metal? The answer lies in the February 27th breaking point, the day the mathematical reality of the COMEX vaults finally collides with the demands of the world's most powerful investors. We are rapidly approaching February 27th, 2026. In any other year, this would be a procedural first notice day for March silver futures. This year, it is existential. Over 400 million ounces of silver are tied to March contracts. The problem? The COMEX only has 98 million ounces of registered silver available for delivery. This is not speculation. This is simple arithmetic. You cannot deliver 400 million ounces of metal when you only have 98 million in the vault. Historically, only 3 to 5% of futures traders take physical delivery. But February shattered that norm. Delivery demand has surged to historic levels, with reports indicating that a massive wave of contract holders is now refusing to roll their positions into May. Even during the violent price smash on January 30th, when silver was knocked from $121 down to $64, over 3 million ounces were still withdrawn from the vaults. This tells you that the big players no longer care about the paper price volatility. They want the metal in hand, and they want it now. The informed minority is not waiting for a headline to tell them the system is breaking. They are watching 5 specific signals that are currently flashing red. First, the Shanghai arbitrage. Silver is trading significantly higher on the Shanghai Gold Exchange than it is in New York. This price gap is a vacuum, sucking physical metal out of Western vaults and into the East. Second, the industrial AI hunger. The massive expansion of data centers and photovoltaic grids is consuming silver at a rate the mining industry cannot match. Silver is no longer just a precious metal. It is a critical industrial component of the future. Third, the registered vault drain. We are seeing record withdrawals from COMEX vaults every single day. Fourth, the margin requirement spike. The CME recently raised margins to 9%, creating an automatic liquidation machine designed to force long positions to close. They are trying to push people out of the market to relieve the delivery pressure. And fifth, the institutional pivot. We are seeing major funds rotate out of paper ETFs and into private, secure vaulting. But here's the open loop that the mainstream is completely blind to. India has just opened a new front in this silver war. The Indian retail market has shifted from being a seasonal buyer to a year-round accumulator. Reports are emerging that Indian households are now competing directly with the Chinese central bank for the remaining global supply. Why is the second most populous nation on earth suddenly treating silver like a national security asset? The answer is written in the linguistic smoking gun of the global markets, a shift in how money itself is being redefined in the digital age. This leads us to a digital shadow play, where the price you see on your screen is being used as a weapon of mass distraction. But here's the open loop that should terrify every paper investor. If the exchange cannot find the 300 million ounces it is missing by Friday, they have a nuclear option called force majeure. This allows them to legally cancel the physical delivery contracts and settle them in cash at a price they determine. But think about the consequences. If the exchange admits they can't give you the silver you bought and offers you depreciating currency, instead, what happens to the price of the physical silver that actually exists outside the exchange? The answer is a total price decoupling. If you are holding paper silver when a force majeure is declared, you're holding a promise that has been officially broken. We are about to look at the 5 signals that prove the smart money has already moved their metal out of the system before the gates lock. We have to recognize that we are witnessing a digital shadow play. While the price on your screen fluctuates by pennies, the structural reality of the market is shifting by billions. We are in the middle of a global financial reset where debt is being devalued and hard assets are being repriced. Russia and China are leading the charge into a new monetary system, and silver is the Achilles heel of the current Western model. This is why you see so much disinformation in the markets today. There are clone channels and AI avatars trying to distract you with fake leaks and sensationalist numbers like $3,000 silver. They want to create so much noise that you ignore the real data. But the real data is simple. We are facing a cumulative shortage of over 820 million ounces of silver since 2021. That deficit cannot be resolved quietly. It will resolve with a price event that will redefine wealth for the next decade. But here's the final open loop before we get to the exit strategy. There's a specific level that will act as the trigger for the final short squeeze. It isn't $100. It isn't even $90. There is a harmonic rotational level derived from the square of 9 geometry that the algorithms use to manage the trade. If silver closes above this specific harmonic pivot on Friday, the institutional algos will be forced to buy, triggering a feedback loop that the exchanges will be powerless to stop. This isn't about human emotion. It is about pre-programmed code hitting a point of no return. We are about to reveal that exact number and the sovereign strategy to ensure you are on the right side of the liquidity reset. The number to watch is $93.75. This is the projected harmonic pivot derived from the angular progression of the current cycle. If silver sustains a close above 93.75, the resistance transitions into support, and the next expansionary leg toward $150 is activated. Until then, we should expect extreme volatility as the shorts use every paper tool in their arsenal to keep the price below $90. So, what is the sovereign strategy for 2026? First, you must separate your physical holdings from your paper positions. Paper silver is a trading tool. Physical silver is wealth protection. Second, do not be shaken out by engineered crashes. We saw the crash from $121 to $64 in January. That was a margin trap. If you hold your physical metal through the chop, you capture the true repricing event. Third, watch the gold to silver ratio. When the ratio compresses toward 40 to 1, it is time to start rotating your profits. Fourth, maintain your discipline. The majority of investors will wait for certainty and buy at $200. You must take the uncertainty of February and turn it into the opportunity of a lifetime. 5 years from now, you will look back at this moment in February 2026. You will remember the technical compression, the vault drains, and the technical glitches that tried to stop the move. You will remember whether you positioned yourself strategically or whether you let the moment pass. The system is whispering. The informed minority is listening. The question is, are you ready for the breakout? Stay sharp, stay disciplined, and stay ahead of the curve. OG out.